Senator Tillis.
Thank you, Mr. Chairman, and welcome, Chairman Powell. Congratulations on your confirmation. I was proud to support it. When you testified before this committee in March, inflation was at a 40-year high, and the Federal Reserve regional banks were stonewalling reasonable requests for information about their activities from banking Republicans. Unfortunately, neither situation has improved. Let's begin with inflation. Inflation is even higher now than we saw you in March. CPI is up 8.6 per year, a new 40-year high. Getting inflation under control is critical because American families are being squeezed every day by rising prices and mounting costs. Also critical to any discussion we have on inflation is an understanding of what served to turbocharge it. In March of 2021, the U.S. economy, as measured by the range of economic factors, was well on its way to recovery. Unemployment was at 6%, down from its pandemic worst of nearly 15%, and continuing to make steady monthly improvements towards a tighter labor market. In fact, 18 states already had unemployment rates below 5%, the often cited threshold to identify a labor market that's almost at full capacity. Likewise, consumer spending had recovered, and it was actually above pre-pandemic levels at 4.5%. And the personal savings rate had returned by 80% to its pre-pandemic state, indicating Americans were capable and willing to spend. Considering these factors and many others, CBO projected that the United States would return to pre-COVID economic levels in GDP output by mid-2021, just a couple of months away. At the same time, the Biden administration was aware of one major area of concern, the disruption of supply chains. In fact, President Biden issued a February 2021 executive order to review U.S. supply chains, in part acknowledging they were already straining to meet rising consumer demand. Yet, despite these facts, a soon-to-be recovered economy, stronger consumer spending, and known limitations on supply side due to the documented supply chain issues, the Biden administration and congressional Democrats still somehow considered it responsible to ram through a partisan $1.9 trillion spending spree. It is little wonder how this catalyzed inflation we see today. And don't just take my word for it. Just last week, economists at Morgan Stanley blamed the 40-year high inflation on, this is a quote from their report, excess fiscal stimulus, particularly the last $1.9 trillion package at the end of March 2021, adding, this is what turbocharged consumption and drove inflation to 40-year highs. Considering this damning assessment of the last reconciliation package, I can only add that any efforts to revive Democrats' currently stalled tax and spending legislation would no doubt worsen our economic condition. Regarding the Fed specifically, though I'm pleased you have begun taking drastic action necessary to right the U.S. economy, these actions are long overdue, and monetary policy remains too loose. CPI inflation now stands at 8.6% per year, a new 40-year high. But the Fed fund rate sits at 1.6%. According to the Fed's semiannual report, the rate should be over 6% under the Taylor rule. This disparity indicates not only the lengths the Fed has yet to go to normalize monetary policy, but also the fact that the Fed has largely boxed itself in to a menu of purely reactive policy measures. Unless the Fed works quickly to move away from their discretion-based monetary policy approach that has remained consistently well behind the curve, I'm concerned the Fed will lose its credibility to effectively manage the national economic situation. Regarding congressional oversight of the Fed, I remain concerned that the Fed and its regional banks continue a pattern of stonewalling reasonable requests for information. The latest example concerns the fairness, transparency, and consistency of Fed decisions to granting highly valuable Fed master accounts. This is a significant public policy issue. Ranking Member Toomey, myself, Senator Lummis, and others have repeatedly requested information about this from the Fed and the Kansas City Fed, yet we still have few, if any, answers. Just this month, the Kansas City Fed refused to provide any information about its recent decision to revoke the master account for Reserve Trust, a non-bank fintech. This is significant given the controversy that arose in former Governor Raskin's nomination process when it was revealed that the Kansas City Fed reversed its denial of Reserve Trust application for a Fed master account following a call from Ms. Raskin. Now, months after defending the decision, to grant Reserve Trust a master account, the Kansas City Fed abruptly revoked the account without explanation. The Kansas City Fed won't give banking Republicans information or even a briefing about this curious reversal. And it's important to point out that Republicans aren't the only ones who have found it difficult to conduct Fed oversight. Several of my Democratic colleagues, including Senators Warren and Menendez, have been vocal when they also found their oversight efforts met with resistance. To address this unacceptable state of affairs, Congress should increase transparency at the Fed. Two simple steps that Republicans and Democrats can take together are subject the Fed banks to FOIA, which they currently are not, and forbid the Fed from using FOIA exemptions to withhold information from any member of Congress, not just committee chairmen. The second idea is a bipartisan proposal that's already passed the House and something Senator Ossoff has mentioned with regard to various federal agencies in the past. Likewise, Congress should also explore making the presidents of the regional Fed banks presidentially appointed and Senate-confirmed positions. This is another bipartisan idea, as Senator Reid previously proposed this requirement for the New York Fed bank president position. And in 2015, Chairman Brown himself raised the idea during a Banking Committee hearing on reforms to the Fed. The time has come to revisit these sensible ideas and others in order to make the Fed more transparent and more accountable. Thank you, Mr. Chairman, and I look forward to Chairman Powell's testimony.
Thank you, Senator Tillis. We'll hear from the Chair of the Federal Reserve on monetary policy, the state of our economy. Congratulations again on your second term, second confirmation to your second term. Thanks for your service and your testimony. Please proceed.